Hi again, everyone. My name is Sayan. Today I'll be presenting my thesis. This is the stuff I've been working on over the past couple of semesters during the fifth year master's program at CMU. And very excited to share all of this stuff with you today. And specifically, my thesis involved looking at how to design investing apps to improve investment outcomes for retail investors. This is, of course, a very pertinent issue because numerous media accounts have chronicled the changing face of investing with the introduction of zero commission trading apps like Robinhood, Webull, and Public that have amassed tens of millions of users. These apps started off as inexpensive, low barrier to entry ways for nerds to invest in the stock market, but eventually became the vehicle that made investing a recreational pastime during the COVID-19 pandemic, and eventually a way for small investors, egged on by the social media, to take on the Wall Street in the infamous GameStop incident earlier this year. To be more specific, smartphone-based trading apps have shifted the stock market from being territory exclusive to institutional investors and wealthy investors like the Warren Buffets and Bridgewaters of the world, and opened it up to less privileged individuals. Unlike traditional brokerage firms, these apps require no minimum amount to be invested and do not charge commissions, as used to be the common practice. And of course, these apps live on people's home screens, making them perfect, both inexpensive and convenient, for the casual retail investor who seeks to avoid the expenses of investing. I mentioned retail investors. Retail investors, by the way, are individuals like you and me who invest their own money and have no professional training in investing. We are boundedly rational agents who often make poor investment decisions due to behavioral factors. As a result, we underperform compared to hedge funds and university endowments, and are also often unable to just beat the market. So that's a problem. Despite their popularity, trading apps seem to be designed for perfectly rational agents who make optimal trading decisions every single time, rather than for boundedly rational agents such as retail investors. For instance, since underperformance in retail investors is caused by behavioral and not informational factors, giving people one-click, easy, and inexpensive access to trading backfires and makes them trade more to their own disadvantage. And these ruinous financial losses have unfortunately snowballed into much worse, as the media accounts have discussed. So in my research, I start to fill in this gap in design guidance in two ways. First, I introduce a set of guidelines for investing platforms based on fundamental results from related fields that can be used to encourage successful investing behaviors. This happened in the form of the first paper we wrote earlier this year that was accepted at ACM's Designing Interactive Systems Conference. And secondly, I present a prototype for Robinhood's Forest, an interpassive trading application based on these principles. This paper has been submitted on the ACM Symposium on User Interface Software and Technology, and Chinmay was a co-author on both of these papers. So through its design, a trading app can determine which actions and behaviors are easily available to users and thus encouraged. In the same way, trading apps can discourage certain actions. To make an analogy, consider social networking apps, Snapchat versus Facebook. With its focus on ephemeral content and gesture-heavy user interface, Snapchat has a very different appeal compared to Facebook and encourages different kinds of user interactions and different kinds of content to be posted. Similarly, design decisions can have an impact on trading behaviors. Certain design decisions can encourage investors to act on their instincts and possibly be less rational, while alternative decisions might encourage systematic thinking. As a concrete example, consider Robinhood's interface. The use of golden tickets, confettis, scratch cards, and free stocks in Robinhood may blur the line between what is an investing app and a gambling app. And the problem doesn't end here. There are other design elements that can be found all over Robinhood's interface as well. There are graphs with no y-axis, defaulting to one-day views in the charts, which can encourage day trading, listing stocks that have moved the most in a day, encouraging overreaction to market news, making stocks a popularity contest with 100 most popular lists, or people also owns. Of course, Robinhood is by far not the only culprit in this, but it is one of the most popular culprits. It's one of the most popular zero commission trading apps. So, despite the large impact that design patterns can have on investing behaviors, research on this topic is unfortunately lacking. There has been some work that studies the impact of design choices on budgeting behaviors. However, there are three critical differences between saving and investing. Number one, saving behaviors are culturally ingrained in us, while investing is not. Number two, successful investing might require some counterintuitive thinking. For instance, it is intuitive for most adults that it is better to save more in times of economic stability for a rainy day. However, it is less clear whether it's similarly beneficial to purchase more stocks in a booming economy when we might be in a bubble or stock prices might be inflated. And lastly, and perhaps most importantly, investing is inherently risky. While putting your money in a bank account guarantees a risk-free rate of return, putting money in stocks stands the investors a chance to lose their capital as well. So, in order to solve this problem, we take inspiration from another field without thick cultural practices, a need for counterintuitive thinking, and inherently uncertain outcomes. That is artificial intelligence, or AI. In order to create better AI applications, HCI researchers have proposed guidelines that have aided practitioners in designing interfaces and sparked future research. These follow a decades-long tradition from the human-computer interaction industry, from Nielsen's heuristics for user interfaces to Norman's principles of designs of everyday objects. Similarly, we introduce a set of guidelines for investing platforms based on fundamental results from related fields. We made these guidelines in a four-step process. In the first step, because investing is such an interdisciplinary field, we spent some time reviewing fundamental literature from related domains. We chose three fields that are relevant to financial decision-making. Number one, behavioral finance. Number two, psychology. And finally, design. I tried to extract recommendations that are actionable through interaction design interventions. Once we had these factors, in the second phase, I consolidated these factors to propose an initial list of design guidelines for investing apps. In phase three, I iterated on these guidelines with the help of other researchers in my research group. We evaluated one trading app, that is Robinhood, and another online brokerage, E-Trade, using these guidelines to determine how applicable they were. These reviews led to improvements to enhance the clarity and the scope of the guidelines in the final phase, review of revisions. So let's talk about the insights we got from financial literature. As mentioned earlier, there is inherent risk associated with investing. This is what sets it apart from saving. Diversification is the process of investing in multiple kinds of securities to reduce the risk assumed in one's portfolio. Investing and portfolio theory emphasizes diversification, but empirically, there is a large gap between the theoretical recommendations and how retail investors actually behave. While adequate diversification is possible with only 30 securities, retail investors typically invest in only 4. In addition, many retail investors trade speculatively rather than systematically, and so increase the risk related to timing. While portfolio theory also suggests choosing securities based on expectations of future returns and the growth potential of a stock, retail investors choose securities not based on that, but with a local bias, and they overweight past performance. Local bias is just the tendency of investors to invest in stocks that are psychologically or physically closer to them. So for instance, investing in your favorite chain restaurant, a local construction company, or the industry that you're employed in. And a large number of retail investors are also sensitive to price trends. That is, they have a trend tracking tendency, and they focus on stocks that are rising or still at current prices. Another factor is that while news releases and earning events have some significance on future returns of an investment, retail investors tend to overreact to these events, believing they fundamentally change the value of an investment more than it actually does. Also, while transaction costs like brokerage commissions and fees reduce the returns earned by an investor, there is evidence that retail investors perform below market returns even before these counts are accounted for. Smartphone-based trading apps and new brokerages are now typically eliminating commissions and instead earn money through margin fees, cash balances, and payment for order flow. As a result, investors can now trade securities for free. But as I mentioned, such free trades have increased trading frequency. And since retail investors may have behavioral biases when making trading decisions, more frequent trading has exacerbated the problem of lower returns. And finally, I learned that investing money in the stock market can also result in a thrilling sensation that is akin to gambling. This is evidenced by the fact that the volume of trades made is lower in periods when there's a high lottery jackpot. However, high turnover in portfolio, whether caused by an overreaction to market news or sensation seeking, decreases investor returns over time. We also drew results from psychology. The heuristic systematic model of information processing is a dual process theory that suggests that human beings process messages both systematically and or heuristically. And due to imperfect information in financial markets, there are inherent uncertainties, there's volatility, investors can only rely on a handful of data points when making decisions. As such, the heuristics investors use, such as the past performance or the analyst rankings, can result in biased judgments and poor financial decisions. One example is the representativeness heuristic. Using a small subset of past data points to make generalizations about the future potential of a stock is prone to result in incorrect assessments. People also assess the likelihood of events with the salience of the event. So investing decisions can be biased by more vivid or more memorable movements in stock prices, what other investors are purchasing, and similar salient events, rather than the less salient information, such as the history of dividends paid by a company. Another example are the two fallacies, the hot hand fallacy and the gambler's fallacy. Hot hand fallacy is the expectation that price trends will persist indefinitely. So rising stocks will continue to rise, falling stocks will continue to fall. This leads buying stocks that show an increasing trend and selling stocks that show a decreasing trend, together increasing the cost of investing. Gambler's fallacy is the opposite. It's the expectation that investments will always return to their original prices. This leads people to hold on to losing investments for too long or sell winning investments too early. Retail investors are also prone to anchor their estimates of what an investment is worth to the price that they purchased it for. So an investor might hold on to another poor investment for too long in the hopes that it would go back to the price they bought it for. And finally, another cognitive bias I studied was the confirmation bias. It leads people to seek information that is consonant with their prior beliefs. It leads investors into maintaining unrealistically high expectations of performance of their current investments and lower expectations of alternate investments they could be making. And when coming up with the design guidelines, we also sought guidance from the design community on designing interfaces for uncertainty. As I mentioned earlier, certain design elements can prompt system one thinking processes, which are undemanding, instinctive, and possibly less rational than system two thinking processes. Speaking of risk, when making investing decisions, investors do not account for factors such as implied volatility or adjusting returns for risk. And when deciding when to invest in what is perceived as a jackpot, decision-making is often dominated by the magnitude of the potential win rather than the probability of success. So, to the extent that trading apps highlight the massive returns of penny stocks and some options contracts or use explicit visual imagery of jackpots or lotteries, they might encourage investment gains to be perceived as jackpots. Now, while latency in interfaces is generally detrimental, immediate payback of risky bets can actually encourage more frequent plays and the tendency to re-gamble any winnings with little financial consideration. You can see this with scratch cards and slot machines, where there's only a few seconds between your initial gamble and the payback. Similarly, in trading apps, instant settlements can potentially result in similar behavior. And how frequently and regularly rewards are obtained can also play a significant role in engendering behaviors and habit formation. A variable ratio reinforcement schedule, where rewards result after a varying number of events, such as with slot machines, leads to stronger habit formation. Unfortunately, frequent trading results in rewards with similarly varying frequency, further reinforcing this risky habit. And finally, entrapment is the tendency of people to commit to a goal that has not been realized yet and is beyond a point of is beyond an economically rational point. In investing, sometimes cutting one's losses, just like in gambling, can be interpreted as embarrassing or giving up on potential returns. To the extent that apps and platforms allow users to share information about their trades, such as on a social feed, this may increase commitment, this may increase entrapment, in turn, and result in mounting losses. So we took from the literature review phase, I came up with 25 factors that play a role in determining investor success. Of these, 20 factors can be were found to be affected through design decisions, through interface design interventions. For instance, overconfidence was one factor that does work to the detriment of investors, but reducing overconfidence through interface design interventions is difficult. So with all these 20 factors, we clustered them using affinity diagramming, and they went under multiple rounds of iteration. For instance, I realized that frequency and thoughtful trading are not necessarily correlated. So I split the initial encourage infrequent and thoughtful trading guideline into two. I also noticed that do not charge commissions was a guideline that emphasized a particular business decision rather than a design decision. So this guideline was renamed into minimize round trip costs. In the third phase, I evaluated my set of guidelines with 5 other researchers and designers to identify its applications, violations, and blind spots. All of them were members of the research group, of my research group, and frequent collaborators. Protocols for the study was approved by the CMU IRB. This study was modeled as a modified heuristic evaluation. In the study, I decided to investigate the design patterns of 2 different trading apps: Robinhood, one of the most popular zero commission trading apps, and E-Trade, one of the big 4 brokerages in the United States. Between them, these platforms handle more than 5 million daily average revenue trades. Moreover, these 2 platforms use significantly different modalities. Robinhood is a smartphone app, whereas E-Trade's primary interface is its website. And these target investors with different amounts of investable capital. Evaluators in this phase were able to identify applications, violations, and blind spots of the guidelines, despite not having any prior experience designing trading platforms. In phase 4, I incorporated the evaluators' feedback and revised the guidelines. First, I rephrased the encourage thoughtful trading guideline into encourage deliberate trading guideline to clarify the emphasis on deliberation and systematic processing. I also improved the order in which the guidelines were presented and labeled them. I also ensured that my final guidelines followed phrasing conventions that were also used by other researchers. So here are the guidelines. Focus on the potential instead of the past, expose risks, encourage diversification, encourage deliberate trading, encourage long-term trading, discourage active trading, discourage overreactions to market news, and minimize round-trip costs. They're labeled, the V, B, and F are the related domains that these insights are derived from. So V is visual, B is behavioral, and F is financial. So now let's dig deeper into a couple of these guidelines. First, V2, expose risks. Help investors understand exactly what they stand to lose or gain with the investments they make, including highlighting the probability of such wins or losses transpiring. In Robinhood, the app highlights the systematic risks associated with investing in the stock market, but it does not highlight the specific risks associated with investing in particular securities. So if you're buying a Tesla stock, you have no good sense of whether you can expect the single stock to go up or down. On E-Trade, actually, it does provide tools for calculating the probability of a security reaching a certain point by a certain date, using mathematical and financial tools like implied volatility and beta values. Another guideline we had was encourage diversification, B1. Help investors put their money in a variety of financial instruments and industries. So on Robinhood, each position actually mentions its portfolio diversity and overall asset composition associated with it. But the overall split of a portfolio, that needs to be found in a setting that's buried way deep in the system account settings. On E-Trade, though, it shows the asset composition of a portfolio front and center. And it also compares the asset composition of your portfolio against sample portfolios. Unfortunately, security selection metrics are missing on E-Trade. So now let's talk about certain design implications of these guidelines. The aforementioned guidelines may be useful not only for evaluating existing trading apps, but also new and emergent ones. For instance, consider Public. Public is a trading app that focuses on making the stock market a social thing. Public allows users to display their portfolio on their profile and share the investment decisions they're making, as you can see in the screenshot from the marketing material for Public. It also curates a list of some of the most popular stocks among users of the app. These features capitalize on the availability heuristic and can potentially make investing a popularity contest, violating some of my guidelines. In contrast, options.ai includes data-driven visualizations of potential future value of a stock, based in part on prices of options sold on the stock. Such an interface effectively applies a bunch of my guidelines. Designers may also find it useful in adopting these ideas from other applications. For instance, mindfulness apps may offer multiple design patterns to encourage deliberate trading, remove fixation on past performance, and discourage overreactions to market news. Also, while I developed my guidelines with the assumption that investments were in traditional asset classes such as stocks, bonds, and other regulated securities, they may apply equally well to newer alternate investments. For instance, when speculating in cryptocurrencies such as Bitcoin on the Cash App, equity crowdfunding, which is like low-cost investing in startup companies on an app like vFunder, and even investing in art in a democratized manner on an app called Masterworks. One thing to note is that this thesis was inspired by media accounts of retail investors suffering catastrophic harm as a result of poor investments. As such, I hypothesized that simple design guidelines might prevent such failures. However, my research suggests that designers, even relying on the most robust theoretical findings, must make trade-offs. Consequently, my guidelines are non-prescriptive as well. Factors such as the age of the target user, their risk appetite, prior experience with losses in investing may guide practitioners in making these trade-offs. I also recognize that my guidelines might be difficult to actually realize into real-life products due to practical business concerns. For instance, apps whose revenues rely on active trading may find it difficult to discourage such a practice. And also, not charging commissions requires platforms to turn to more creative revenue streams that have had limited success so far. One side effect of my approach in this entire guideline formation process was that my guidelines are likely less effective for vulnerable populations. This is because of fundamental and persistent population biases in the literature that I draw from, especially psychology. Many fundamental results were studied with white, rich men and educated people, and wealth, independence, and education may as well affect investing decisions. As such, my guidelines are best seen as a first step in a longer process of making investing more democratic in actuality and not just rhetoric. Along similar lines, the list of factors I draw from in the literature review process, while most prominent, is a non-exhaustive list. This is due in part to the interdisciplinary nature of investing. In evaluating the guidelines, I was only able to examine 2 investing apps that are popular in the American market. Unlike most apps that you can just download and start using, making an account on an investing app actually requires to put in personal information and probably put in some money, which is hard to do on a lot of platforms, especially on platforms outside the United States, such as eToro, which is really popular in the UK and Israel. and I was not able to open trading accounts on a lot of these apps. Furthermore, while I was conducting my evaluation, furthermore, while I conducted my evaluation with HCI researchers and designers who were knowledgeable about the design process in general, I am missing two important voices of financial experts and of users of investing apps while I evaluated my guideline. All of these could be productive areas of future work. Specifically, it could study how trading apps can encourage more successful investing habits. And finally, this work may prompt future policy that requires trading platforms to disclose not just information about the kinds and the audience they serve, but also about interactional patterns of public interest, such as how long do users hold securities and how frequently do they trade in response to news events on the platform. These things may improve future design of trading apps. Okay, cool. So given this background, we ended up creating Robinhood's Forest, which is an idle game for improving investing behavior. It does so in two ways. Number one, it helps people increase portfolio diversification through strong visual metaphors. Also, it helps reduce trading frequency through restricting gameplay using idle game mechanics. Robinhood's Forest is inspired by its namesakes, Robinhood, a popular zero commission trading app, and Forest. Forest is a game-like intervention that helps users stay focused and avoid distractions of their smartphones. It does so by using a tend to a forest metaphor. On Forest, users plant seeds in their forests or virtual forests that grow into trees as long as users abstain from using their phones. Robinhood's Forest uses a similar concept. Robinhood's Forest represents trees that shares that a person owns in a company using a tree. Now, as a stock performs well, the tree grows visually, and if a stock price drops, the tree withers and shrinks. When an investment is sold, the tree is felled, leaving behind a stump. A portfolio is represented as a portfolio of diverse stocks is represented as a diverse forest on Robinhood's Forest. So I mentioned idle games. Unlike traditional games that emphasize player interactivity and engagement to generate enjoyment, idle games are different. They have minimal to no player interaction. Such games are based on the premise that waiting is playing. Instead, players derive enjoyment from delegating interactions to another, usually a computer. As such, games are often endless and there is no win or lose state. Notable examples of idle games include A Dark Room and Progress Quest, both of which are self-playing RPGs or role-playing games, as well as incremental games such as the satirical Cow Clicker and the mainstream hit Cookie Clicker. And as I mentioned, using similar concepts is Forest. Now, despite being interpassive instead of interactive, idle games are attractive to people because number one, they do not require constant attention. They also provide players with recurring gratification even when they're absent from the game. They also make compulsive gameplay safer because you can siphon off compulsive urges onto this game. And finally, they help eliminate drudgery because you can automate whatever the routine, boring actions are, and you can still maintain agency over the consequential big decisions. These qualities translate very naturally into investing as well. Oops. So Robinhood's Forest embodies two hypotheses. The first is that an idling mechanic can encourage limited gameplay and reduce trading frequency, and thus improve investing returns. We do so in the following way. When an investment is sold on Robinhood's Forest, the tree associated with it is felled, and it leaves behind a stump. These stumps remain in the forest for a week, restricting the amount of available space on the forest. I hypothesize that the lack of land area to plant new trees may reduce frequent trading and discourage users from regambling any winnings. Abstract representations are at the core of Robinhood's Forest. They minimize visualizations of short-term fluctuations in price, which helps reframe the concept of stocks as long-term investments. Another consequence of the visual metaphor is that people want to diversify their portfolio as a means of diversifying their forest and having multiple kinds of trees in it. So here's what Robinhood's forest looks like. Initial prototyping, as you can see on the left, was done on Figma, and then the final prototype was built as a web app on React. The final version was hosted on Netlify, but it only uses local storage for storing portfolio information. The source code for Robinhood's forest is open source and available on GitHub, and it uses it gets all of its financial data from the Google Finance API for Google Sheets. In order to validate a prototype for Robinhood's forest, we ran two small-scale studies. The first was a pilot study. We recruited participants who were recent graduates of or current students at CMU, and all of them had less than 2 years of experience in the stock market. These participants were found through snowball sampling. We chose this particular demographic because we wanted to cater the design of Robinhood's forest to young, new retail investors. These participants had used services such as Robinhood, Interactive Brokers, Charles Schwab, and E-Trade in the past. In the study, we presented participants with two mock-ups. First was an initial prototype of Robinhood's forest, and another prototype represented a typical trading app like Robinhood. To create the scenario, I selected 5 existing small cap stocks from different industries from the Russell 2000 index. And then I changed their names a little bit while preserving their industry identity. For example, we had Silvergate Film for the entertainment industry. Successive screens in the interface showed stock prices over 5 months, and the prices were derived from the actual underlying stocks. To create the second scenario, I gave the same companies different anonymous names and altered the stock prices marginally. At the end of each scenario, I explained at the start of each scenario, I explained the design of the mock-up to the participant. And then during the scenario, I asked participants what kind of trading decisions they would make, whether they want to buy, sell, or hold securities. And I also asked them when they expect to see their portfolio next. In the study, 4 out of the 5 participants held positions for longer using Robinhood's forest. On average, participants performed 3.8 transactions when using the traditional interface over the 5-month period on average, and 1.8 transactions when using the Robinhood's forest interface. Now, it is noteworthy that due to the small sample size, these results, while suggestive, are not statistically significant. Participants also mentioned that they really like the user interface of Robinhood's forest and found it easy to understand the forest metaphor. But at the same time, participants said that they valued the performance visualization that was present in the other interface. In order to account for these preferences, I added performance charts to each stock in Robinhood's forest as well. But at the same time, to discourage overreactions to market news, I put this information below the fold, so it was not easily accessible and not front and center. Now, the concept validation study suggested that compared to traditional interfaces, an ideal game-like interface may improve investing behaviors by reducing trading frequency. This follow-up study was designed to study whether visual metaphors also encourage diversification. Recall that in the previous study, we used fictitious stocks and a fixed portfolio for investors, so we couldn't really study what participants wanted to do with their own portfolios. So in this study, we continued working with the same participants, apart from one who had to drop out due to scheduling issues. And we performed a structured interview with the Robinhood's forest interface. In the structured interview, we asked 3 kinds of questions. The first was just asking whether participants understood the metaphors and mechanics used by Robinhood's forest. Second, we asked participants how they felt these mechanics would influence their trading behaviors. And thirdly, we asked participants for suggestions on how to improve the interface. From the study, we got very promising results. All 5 participants reported that they wanted to expand their portfolio to have a diverse selection of trees corresponding to a diversified portfolio. Unfortunately, they sometimes did it in suboptimal ways by buying stocks of very similar companies that they already had to get more of the same kinds of trees. Now, this kind of increases diversification in a portfolio, but it is suboptimal because the portfolio is still pretty concentrated in the same securities. Another thing to note is that on the topic of frequent trading, respondents had mixed feelings. Some said that they would trade less, but others also mentioned that the visual design of Robinhood's Forest would bring them back to the app very quickly. Note that these are the same participants who in practice traded less in the first study, which suggests that some subconscious behavior change might be taking place. Participants also embrace the idea of watching their trees grow as an enjoyable interpassive activity. Without prompting, two participants told me that they wanted to extend this visual metaphor, suggesting that the tree metaphor actually afforded interpassivity. They wanted to add ornaments for dividend stocks or even ornaments for Christmas onto the trees in their portfolio. Though one participant mentioned that they wanted to extend the metaphor and have the concept of watering their trees daily, which might be a useful extension. Unfortunately, such an extension can encourage more frequent trading, which is something we do not want. So we need to be careful. There was also some confusion about how the mapping between stock prices and the size of trees work, which needs to be clarified in future versions. But overall, participants really like the user interface of the app, finding the design to be pleasant on the eyes and a pretty good visual. I caution that this might be a result of some demand characteristic bias because I knew the participants and I was interviewing them. So yeah, just wanted to put that out there. But now let's talk about the design implications of Robinhood's Forest. With Robinhood's Forest, I saw that participants increased diversification, but the specific ways in which they did that varied. The specific design choices based on my approach may be able to better target these specific behaviors. For instance, right now we depict all shares held in a particular company by a single tree, which obscures the user's exposure to that company. Alternative designs might highlight this exposure by showing more trees for more valuable stocks, which might nudge better diversification behaviors in users. Another thing to note is that currently the prototype did not use social persuasion at all, which may open up the opportunity to tune specific behaviors. For instance, a participant suggested that the overall growth and the overall diversification of a portfolio might be something that is actually public. Might be something that's actually public, but you obviously want to do it in a way that preserves user privacy as well. There's also a vast body of psychological research that demonstrate that explicit attempts at persuasion might result in what is known as reactance. This reactance can provoke participants to engage in harmful behaviors, develop negative attitudes towards the content, and even adopt behaviors opposite to the ones that were encouraged. My study suggests that participants were not always fully aware of when idle games change their behaviors, such as with reducing trading frequency, and that they appreciated other aspects of the interface, which were the visual aspects, suggesting an opportunity to circumvent reactance. Indeed, other researchers also found that making motivational messages less obvious or intermixing them might improve their effectiveness. My work so far suggests that idle games may be one way of doing so, especially for investing behaviors. So another thing to note is that idle games raise a lot of interesting questions for designers. Specifically, idle games are designed to restrict interactivity and delegate gameplay, a goal that is at least superficially at odds with what is current practice. For instance, some participants wanted to add labels to their trees and choose which tree species was depicted. However, these features make the game more interactive and defeats the purpose of enjoying the game passively. This makes the role of a designer much more critical when designing idle games. A related question is deciding which actions should be automated. Automating actions may improve users' outcomes, but it also might reduce enjoyment. For example, investors frequently automate decisions such as rebalancing a portfolio because it generally boosts returns, However, if enjoyment in the idle game is tied to performing these infrequent actions, the designers might want to preserve them for the game users. Navigating trade-offs like this requires deliberate designs on the part of the designer. So yeah, Robinhood's Forest provides initial support for the usefulness of idle game-like interfaces for improving investing behaviors. But the current system and its analysis has several limitations. Number one, I was only able to test the interface with a small number of in-lab participants over a short period of time, as is common practice in game testing. But future work could explore long-term effects on participants' own portfolios over a larger population. A large number of participants with a variety of portfolios can also result in helping quantify the benefits of an idle game-like intervention, including how much more money participants earn through better investing in such an interface. Another thing to note is that while I developed Robinhood's Forest with the assumption that investments were in stocks, these can also apply to other kinds of asset classes such as cryptocurrencies. Now, certain idle games have social interpassive components such as cow clicker. Future work could explore how we can incorporate this into Robinhood's Forest. Similarly, Robinhood's Forest currently uses no kind of delegated actions, which also could be added in the future. This might be nice for dividend reinvestment, which is something that people might want to do in an automated manner. Finally, future work could also consider the benefits of including visual representations that have no equivalent in the real world as a safe way to siphon off otherwise compulsive urges of trading in non-consequential ways. For instance, users in study 2 suggested including flowering trees and accessorizing with seasonal ornaments and tree houses, etc., as a way of just making the forest look more pretty. And this is a very non-consequential thing to add. So yeah, what did we learn? Of course, this thesis was inspired by media accounts of retail investors suffering catastrophic losses due to their poor investments on these trading apps. But by introducing a set of design guidelines, as well as demoing a prototype for an idle game-like interface for investing, I hope to set the cornerstone for designing investing apps that are better suited for boundedly rational agents like retail investors like you and me, rather than professional investors like hedge funds. And overall, I think that this work suggests that investing is actually an activity that is worthy of closer attention by the design community. And doing so is also necessarily to convert it from an activity that's fraught with risk and speculation and reserved for the privileged to one that is actually truly democratic and open to everyone. So yeah, with that was my thesis. Before I end, I would like to really thank a bunch of people. First up, Chinmay, who was my advisor and the co-author, really hands down the best mentor I could have asked for over the past couple of semesters. Actually do like quarterly reviews for myself every 3 months. And he was like on the top of my list in Q4 2020 and Q1 2021, because he taught me so much about HCI and how to do HCI research and finance and like life, for God's sake. So yeah, thanks a bunch for that. Also, thank you, Jeff, for being on this master's thesis defense committee on such a short notice. Also, I took persuasive design with Jeff last semester, which was an awesome class. It gave me a new perspective on a bunch of things, including psychology, and you might have seen hints of it in various parts of this presentation. I hope I didn't mess it up too much. Also, thank you to Pranav, who is also in our research group. He's one of the few friends I made during the pandemic, and he also taught me a bunch about HCI and HCI research. Also, Julia and Yasmin were in the research group. We had some great conversations, and they also helped with a bunch of things in the paper. And yeah, this ends my 4-year CMU journey. So I would like to thank all the faculty members at CMU who dealt with me, specifically Anilada, who's been a fantastic mentor, and Tom Cordina, who was also one of the best advisors I could have asked for. And Finally, I might not remember all the work I've done at CMU, but I will remember all the fun. Uh, and that would not have happened without my friends who made everything so awesome. But in particular, Misha and Ria, who often actually blurred the lines between work and fun, which was cool. And yeah, finally, I would like to thank my family, without whom like none of this would have even started. So yeah, with that, I think for one of the last times, let me stop sharing my screen. I don't know how to do that in this setting. Cool.
Great, thank you, San. Yeah, I can see that there's Zoom congratulations and confetti and applause happening. Great. I feel like it would be great if we can start with an audience question or two. Let's do 2 audience questions, and then maybe I can turn it over to Jeff for his grilling. All right. If you have a question, maybe you want to raise your hand or just speak up, it's fine. While folks are thinking of questions, I will say that there is a very large number of people here in the audience. And I didn't notice creeping in. Maybe we should have waited for everyone to start, but oh well. Thank you for coming. And I think Science got his slides shareable, so we can probably send out a link later. All right, questions? Well, maybe we should do it, Jeff, first, given people are thinking of the questions. So, Jeff, on to you, sir.
Sure, that works for me. Great job, Cyan. It was really awesome to be a part of this experience, to get to know about the research you've been doing with Chinmay. It was great to see some of the topics and content from persuasive design in your work. It absolutely did not. You represented it very well and accurately. So I'm really pleased to see that. So overall, really great job. It was. I love the combination of gleaning design guidelines and applying them to actually creating a prototype. So that the whole process was fantastic. Let's see, I noted a number of questions. I'm trying to think of the most logical order to ask these in, but I'll just start with maybe the most high level question that came out from reading your thesis and hearing your work again presented today. I'm really curious how you envision implementing Robinhood's Forest as a sort of freestanding application. Do you see it as more viable as sort of a training app for individuals who are sort of first getting into the stock market, sort of orienting them to sort of the sort of mindsets or sort of decisions they might have to make in sort of a safe, accessible way? Or do you see it as an actual trading app that would use these idle game mechanics as part of its design? Or maybe a third alternative might be sort of a parallel app that might sort of incorporate behavioral data from other trading apps in terms of the portfolio a user has, and to be able to sort of show or either nudge specific behaviors in regard to that portfolio. So essentially, of those options, is sort of a training app, like to sort of learn how to be a good trader, or an actual app, or a sort of like a companion app to others.
Yeah, no, that's a fantastic question. And Chinmay and I've also had many discussions about this, but I think at least our vision is it can definitely be something more than that can stick, like the interface is something that can stick with you for longer than just a training period. In particular, it might actually, making a trading app by itself is pretty difficult because you need a lot of like SEC regulations and like talking to a lot of things and connecting to stock markets is what I'm guessing. But I can totally see such an interface getting there, especially if it actually promotes a lot of healthy investment habits. One of the easier places to start off might be actually with a companion app. So as an additional interface into your portfolio, that you can see even though you make trades on Robinhood, but a lot of these trading apps have like APIs that can be fetched into Robinhood's forest. So you can actually make the trades on Robinhood, but when you want to see how your portfolio is doing on a particular day, then you open Robinhood's forest and see it through that lens. So it can go on top of that, at least in the beginning, and then over a period of time, maybe it can become its own thing and actually interface with the stock market.
I think that makes sense, because there's some inherent tension in designing a game that's meant to affect real world behavior. Is if you don't integrate enough of the real world applicability, it's hard to get players to care or to take it seriously. But at the same time, like part of the goal here is to maybe get people to think differently about their decision making. And so the value of having this sort of exist as a companion app is that you might be able to do things like encourage some alternative ways of thinking, or showing alternative outcomes, or simulate what might happen if you chose a different pattern of selling and trading, or diversification, whatever the dimension is. So it's a make balance that tension between actually caring, being invested, so to speak, in the outcomes in the game, but nonetheless having this sort of somewhat a level of distance or freedom to experiment or to pull different levers and see what the outcomes could be, where there isn't actually a consequence for your finances. So I think that could be really cool. Chinmay, I have a bunch of other questions. Should I hold off or ask another?
Oh no, I think you should go for it. I also like the puns. So
I also see there's a hand in the audience, so I will defer to Yasmin.
So
Yeah,
let's do that. Yeah.
All right. Thanks so much, Cyan. Thanks for taking my question. To be honest, I'm not entirely sure what my question is, but let's give it a try. First of all, congratulations. This is a great body of work, and it's been fun to be a witness to it as it's grown and evolved over the past, I suppose, year or so. I think so, and I think another high level takeaway for me is how exciting it is that you're focusing in this space of e-trading. You know, I haven't seen too much HCI work in this space, so I think that that's a really great strength within the HCI context of this work. I should also preface that I don't think I've ever traded any stock. So, you know, take this question for what it's worth. It could be irrelevant, but I guess, you know, I'm really intrigued by Robinhood's forest and this idea of, you know, what are some design interventions that could be implemented in order to benefit the users by way of, you know, having more financial gains from their trading, by way of sort of, if I understand correctly, supporting them to, or encouraging them to not engage in as frequent trading, day trading, or more often than that. And I guess I'm curious, you know, thinking about moving forward with this work, and, you know, often when we do these types of design interventions, we're, you know, hopeful that maybe Robinhood or an e-trading app is listening, and they might be interested in taking some of these design insights from your work and implementing on their platform themselves. And, you know, when I try to think about their perspective, it seems like there might be a conflict of interest, if you will, of sort of what would benefit the users in this case versus the platform who's mediating a lot of these behaviors. In terms of, it doesn't, as someone who doesn't have much expertise in e-trading, it seems that, you know, there is the incentive for Robinhood to encourage more frequent trading and maybe other behaviors that aren't actually that beneficial to the users. And I'm curious how you are thinking about that tension between sort of, I guess it's sort of conflicts of interest between different stakeholders of Robinhood's forest.
Yeah, that is a wonderful question, and definitely a very big concern. Number one, with the guidelines as well, because there's definitely this trade-off that needs to be made between what's good for the user and what's good for the person who's implementing the interface. And that's something that you find a lot of times in this is a trade-off you make a lot of times when you're designing interfaces, I believe. That said, overall, I do think actually platforms at a high level have an incentive to promote healthier trading habits in their users. And the reason for that is a lot of these trading apps are for retail investors. And if a retail investor is suffering a lot of losses and losing their money on a trading platform, they will eventually run out of money and stop trading on that platform. So it is beneficial for the platforms to induce healthier habits and the traders, so that the traders' investments are increasing in value, and so that the investors stick around on the platform. That said, certain platforms do have a lot of their business models are centered around frequent trading. Like Robinhood is actually a good example because they make money through market making. So more transactions that are going through Robinhood implies more money revenue they're generating. But that said, a lot of apps are also these days moving away from such practice and only making money through margin fees or the interest rates they charge when they loan people money on the app. So yeah, there's definitely a trade-off to be made, but overall, I do think that if a platform encourages healthier trading habits, whether it's through following the design guidelines or implementing the Robinhood's Forest interface, it will result in better financial outcomes for the investors and make them stick along on the platform for longer, becoming more of having a higher lifetime value as a customer on the platform.
Great, thank you, Simon. Any follow-up from the audience? Any other questions? I also recognize that the calendar invite says 11:30 as the end time, and Jeff and I talked, and we have until 11:45. So if you have to go and you want to ask a question, please go ahead. And if you need to drop off, that's also fine. I think we're still recording, so you will still get the answers to other questions that other people ask. All right. With that public service announcement, Jeff, back to you.
All right, thanks, Chinmay. I guess I have a question that sort of extended my previous one. So in the space of especially in game-based design interventions, there's often this really tricky issue of transfer. So how do you transfer behaviors that are occurring or experiences that happen within the game to real life decisions? And in my own work, I've had this tension emerge, especially in cases where we're using more subtle techniques like metaphors, like game mechanics that aren't overly explicit, as you mentioned toward the end of your talk. So I'm just curious if you, for the next iteration or next version of Robinhood's Forest, is there any, do you recognize any need to implement more transparency or more overt explanations of how those mechanics actually relate to trading behaviors and their relevance, right? Because at least some of the participant responses indicated that sometimes they were interpreting the mechanics and metaphors in ways that were actually like counter to the sort of desired types of patterns of behavior you'd want to reinforce. So I'm just curious, what are your thoughts on where and how you might introduce sort of the explicit meaning of those behaviors and how they relate to more optimal patterns of investment?
Yeah, that's that's also a fantastic question, and something like I spent a lot of time thinking about. And if I'm being very honest, like I don't have the best answer to that question. What I was thinking was that a good way to answer this question will be, again, with a larger study, because in the study that we did, we explained all the visual metaphors of Robinhood's Forest to the people, to the participants in the study. But we don't know how this, what kinds of behaviors that kind of interaction design results in when we do not have the backing of the explanation. So maybe the visual metaphors work better, maybe they work worse. So that is something that will need to be studied. And also, as you pointed out, like some things will need to be clarified in whatever the final interface is, just to make sure we are not inducing then behaviors that are contrary to what we want, as you mentioned. So I think the best way to answer that question will be through a larger study, but yeah, I don't want to make any claims without having too much surety. But you also mentioned about the idea of transfer, which is actually, if I'm being honest, something I was not aware about is a big issue. But based on my initial interpretation, it seems like if Robinhood's Forest is where the behavior change is happening and also where people actually make the trade. So if it's an integrated app, maybe that will not be that big of an issue because the behaviors from within the game will actually be the practical things that people are doing.
Yeah, that makes a lot of sense. And with the issue of where do you introduce sort of the transparency or explanation? It's like I said, sort of a classic problem in the space of designing transformational games. Happy to keep this conversation going because I've had some experience in that. In some cases, we've learned a lot from how not to do that, like when not to introduce, because there's sometimes this tension between if you make it too much a part of the game design itself, it disrupts the sense of immersion in the world you're creating. And so some cases it's better to sort of save those for almost like a debriefing or like something you explain after the fact rather than trying to force it into the game itself.
Absolutely. Yeah.
All right, I'm gonna ask one more question because I'm really curious about it. It seems like the rationale of using designs that are sort of more subtle in nature is that you're sort of counteracting these sort of instinctual responses that lead to suboptimal outcomes, right? So you're trying to sort of counteract that through, say, the restrictions of the game mechanics don't allow for specific types of actions that would normally be sort of instinctual. But we also know that a lot of times those instinctual reactions, and a lot of the ones you mentioned, the heuristics and so forth, are driven by emotions, right? They're driven by some emotional reactions to information you're confronted with in the moment. And it can be very hard to overcome those emotions. That's why those behaviors are so common and ubiquitous. And I would imagine they're also still experienced by more veteran investors. They might have had methods of overcoming them. So I'm just curious if your work has shown any strategies, either sort of mentally or behaviorally, that more experienced investors use to overcome those heuristics or emotions. And or maybe a fair, more answerable question would be, do you think there's a role in Robinhood's Forest of sort of giving players some scaffolding or assistance in recognizing like their impulses or their emotional reactions and ways of dealing with those?
Uh, yeah, I'll say a couple of things in the context of actually both the guidelines and Robinhood's Forest. I think one big thing is that we do emphasize in the guidelines that we want to encourage more deliberate trading. And I think if platforms have that in mind, eventually, hopefully, we see some interventions that actually are able to counter one of the more emotional things as well. But that said, I do think it's a very challenging issue because number one, I don't have a good sense about how actually when you open an app, you'll tell if someone is going to make an emotional decision right now, um, from the perspective of the app. So uh, and yeah, within Robinhood's Forest, we actually did not bring up the concept of making emotional decisions in either of our studies, unfortunately. So yeah, we don't, I do not have anything to report on that, but yeah, definitely, like I think it falls under the purview of like making trading more deliberate, and definitely would love to see this addressed in like yeah, like more interfaces that try and follow these guidelines that we came up with.
Yeah, definitely. Like I'm imagining some like utopian world where like if imagine a version of a trading app that it's all about sort of the opposite of dark patterns. So it's all about light patterns. So you're basically being 100% transparent about, we know your instinct is to do this, is to trade right now, but you should counteract that. Or like pointing out like typically these apps are designed in ways that sort of reinforce these problematic behaviors, but we're designing this as an alternative to those sort of to those bad. I mean, it's very idealistic. I'm just wondering to what extent there's a role for that. It's more of a thought experiment than anything, because it's likely not going to be feasible in practice. But it might be a way for you to, in addition to reinforcing desired behaviors, you might be able to use Robinhood's Forest to some extent to help people identify their own patterns outside of that context, give us more sort of metacognitive awareness of how much they're vulnerable to what's happening through these vast modes of thought, these more
This is actually,
instinctual.
oh yeah, this is actually slightly random, but I just thought about this. I recently started using a weather app, which has like a personality. So instead of it just telling me what the weather is, it like has some context around it, and it has like snarky comments, and you can like choose what kind of political inclination it has, and what like how rude it is. So this morning I checked the weather, and it just had this snarky comment in there, which was like, "Oh, it like ejected all of the climate change deniers into space," or something, which was just a very random thing, but it made me laugh in the morning. And I'm wondering if like having some kind of like personality to this trading app might be a way to account for these emotions, because then it makes it more of a conversation, and it's more natural for you to talk about emotions if the app you're interacting with has a personality to begin with, rather
Yeah,
than
that's interesting. So like a embodiment of like Mother Nature, so
yeah.
for example, that like comments on your decisions in the game.
Yeah.
That's sort of a representation of like Mother Nature as a metaphorical representation of your financial
Yeah.
success or
Yeah, we should change all the trees into ants, and then have the ants talk to us.
Yes. As a sort of a funny postscript, I was working on a project a few years ago that we were calling an idle game, but sort of tongue in cheek. We were trying to design a GPS game that had a personality that sort of made snarky comments if you were doing things when you were driving that were environmentally unfriendly, like idling for too long. So we were playing around with sort of this app that would have that sort of personality, sort of point out when you're doing something problematic. But that thought was an interesting postscript.
Great. All right, so I have a couple questions, but we've talked so much, so I'm trying to figure out what questions I haven't actually asked you already. But I don't know, this is a defense, so I guess I'm supposed to ask you the difficult things. Look, I think one question that I have here is that with stock investing in particular, but also a lot of these securities, the unexpected results dominate the expected results in the short term, right? So you may think stocks go up in general, but they may go down for 5 years in a row, right? And it seems like we have designed metaphors in there to reduce short-term sort of volatility, but not these long-term slides, right? Like, what do you tell an investor who's started to use Robinhood's Forest this year? And I hope this is not the case for anyone who has money in the stock exchange this year. But let's say that for the next 5 years, stocks keep dropping, right? So how does this forest metaphor help develop the patience in this case?
So yeah, that's a very challenging question, and something I hadn't actually thought about that much. But I think there's a couple of things that the Robinhood. I think the really reason I really like Robinhood's Forest is because it does two things at once. Number one is reducing trading frequency, and number two is the strong use of visual metaphors. I don't think in this scenario the trading frequency is that important, because we're just talking about someone who's put money in the stock market. But I think even the visual metaphors provide a couple of things. Number one is it minimizes the short-term fluctuations in pricing, but now we're talking about like long-term, some trends that might appear at the macro level, but are overall not too concerning. So again, like that is not the most important, useful thing in this case, but I think where Robinhood's Forest might be better than the competition might be the fact that it is still encouraging diversification. So at the end of the day, you still want to follow whatever the fundamental results are. So diversification is good, even if the market is going down. You still want to make sure you have a diversified portfolio, because when certain industries start to recover, you are still making, you're not subjecting yourself to too much specific risk, as they call it. So yeah, having that a diversified portfolio there is great. And another thing I think is really good is that Robinhood's Forest specifically helps eliminate risk related to timing. So it's not that you're making speculative guesses and then putting in money as soon as you sell a particular security. You have to wait a week. And of course, we can mess around with the times there a little bit more. So it's that like when the curve is going down, you're not just buying stocks at the very bottom of the curve. You're just buying at the very top of the curve. You're buying them at multiple periods. So when even it starts to go up, you make at least some of the money back from some of the investments that you made. So I think diversification, both in terms of the security selection and the timing, is one thing that sets Robinhood apart from the competition. But that said, I think this is a very interesting question. And yeah, personally, I don't think a lot of trading platforms do anything to address this, but we don't do too much to address this either. So definitely something to work on.
Yeah, low baselines, but I think I buy the idea. If you can't help with patience, at least you help with diversification. So that's good. Okay, I guess the last question to me is, so you're off going to Lyft in maybe a couple of weeks, and you're going to do some really cool work there. I'm curious what part of this research experience you feel like would be most helpful in a completely different context at Lyft. I'm just curious about it. Yeah.
Oh, yeah, that's a very interesting question. I think overall, the reason that I did HCI research to begin with, and the reason I'm working at Lyft, seems very contradictory at first, but I do love like consumer-facing products. That is something that I really love, which is why I'm working at a technology company like Lyft, and which is why I'm doing HCI research and not CS theory research. So I think overall, just thinking about the users every time you make a decision is one of the most valuable skills I picked up over the 4 years at CME, because I've been passionate about HCI since probably the first semester I came here, and we had one of the presentations from the HCI department. And I thought that was really interesting. And then I took a bunch of classes and fell more in love with it. So overall, just the process of thinking about the user at every single stage, thinking about the behaviors, certain design patterns afford, was the most useful thing I learned. But to answer the actual question about which part of the Robinhood's Forest interface will be applicable in a ride-sharing setting, I think when I am using a ride-sharing product, there are two big concerns, two things that stand out to me, because the ride, like getting an Uber or a Lyft happens in two parts. The first part is actually ordering it, and the second part is actually being in the Uber and going to your place. The second part, concerns related in that setting, are like a lot of security issues, making sure that you're going along the right path, people are able to track when you're arriving. At the top of my head, I don't think anything that particularly works well with the things we've talked about today. But I think the first one is when you're actually booking the cab, you oftentimes have to wait for the cab to arrive, which is another instance of being patient and waiting for things to happen over time. And I don't have a good actual implementation here, but I am wondering if, it's like seeing a tree grow might be something that's slightly better while you wait for your Lyft to arrive than just
interesting.
Your ride is booked for 10:58 p.m. and you just need to wait now. So
yeah,
that was the first thing that came to mind. But because
you have a whole career ahead of you to try and figure this out. I wish you the best of luck there. Jeff and I talked a little bit, and we are both very happy with the defense and with the document. We'll have feedback on the document for you offline. But for now, congratulations on passing your defense and on a great thesis. And as Amy says, thanks for the great presentation too. Right.
Yeah, thank you so much. Thank you, both of you, for taking the time out of your morning as well.
Absolutely. Congratulations.
Okay. Well, I'll see everyone again soon. Have a great day, Sayan.
Bye-bye.
Take care, everyone.